Minerals' Maiden Lolworth drilling campaign confirms gold and silver system and expands the growth potential. Nick Tulloch, the CEO, is joining us today. Nick, how are things?
Yeah, very good. Thank you, Mark. How are you?
Yes, doing all right. Doing good, thank you, Nick. So I wonder if you can perhaps just, first of all, talk us through this first drilling campaign here. So there was quite a number of holes, 28, I think, over 1,000 metres done in total. Just talk us through the programme and what it aimed to do.
Yeah, of course. So Lolworth is by far our biggest tenement. It's up in the northern part of Queensland. We've carried out several surface sampling campaigns in recent years where we've had some very good reads of gold and also actually rare earths. So today's news is a further development of Lolworth, and yeah, I think probably to anyone reading the announcement, the standout feature, the standout fact is that we've picked up quite a promising silver find, particularly the Uncle Terry prospect in Lolworth. And the announcement sets out some of the grams per tonne from the drilling and also from the rock samples at the surface. Silver's obviously one of the metals at the moment. It's been terrifically strong in price this year. We've had for a while some suspicion that there was going to be an interesting opportunity in silver at Lolworth, but I think it's fair to say that today's news is way above our top end of expectations.
Right, excellent. No, it's good to see that silver there coming in. So that's the highlight was, I think it was 7.18 grams per tonne at 4 metres.
That's right, over around 4 metres. So we're getting good readings over decent lengths as well. So and I think this was in the announcement. What we believe is that the mineralisation extends far beyond where we've drilled. Yeah, and this is based on some of the surface work and some of the things we've observed actually on site. So as ever, usual caveats. There's a bit more work to be done, but these early findings suggest we've got something of really some significance actually.
Good. Well, it's a good time. It's a very good time to be in gold and silver. I have just come back from the Swiss Mining Institute in Zurich, and I was hosting the silver panel. There was a gold panel in the March one, but silver, of course, doing extremely well. And just to give a general sense of that, the general theme was we're going to see $100 silver over the next sort of 12 to 18 months, and perhaps $250 to even $500 is not out of reach in the future, but that'll be sort of towards the sort of back end of the cycle, let's say. But silver was very popular, and there's a lot of good silver stocks there. So I think investors are looking at both gold and silver, and you effectively got both. So, I mean, does it change how you attack the project here, or do you sort of carry on as normal?
A bit of both. I mean, certainly we carry on, but I think what we can see from the results is that Lolworth has potentially become more valuable. We have, you can go back across our announcements. We have referred to Lolworth as a gold and rare earths prospect. We don't want to make it too much of a mouthful, but silver needs to feature in there somewhere as well. So we've had some outside interest from the Queensland government and also from James Cook University in rare earths in the past at Lolworth. We've had a lot of our own interest in gold, clearly, but this silver resource, or potential resource, it looks like it adds just a completely different dimension or an extra dimension to Lolworth, which, as I say, is just a vast area. We've only really started. This is, for an area that's almost 1,000 square kilometres, 28 holes. We are literally sort of a needle in a haystack here, and if this is what we're finding at the first pass, I think we've got quite a good story that will play out over the next drilling campaign.
Good, and I think you said in the RNS that these results sort of demonstrate perhaps the scale of the wider opportunities, and I think you're referring to the sort of Blue Mountain being sort of easy to get into cash flow, lower hanging fruit, but you've got now Lolworth looking like this could be not necessarily the flagship project, but it's much bigger than perhaps some of the other ones in the portfolio.
It's a good expression, a flagship project. We've made no secret of the fact in recent months that our focus is moving, or has moved, from Victoria into Queensland. And that near-term production at Blue Mountain, Raglan as well, once that acquisition is concluded, that gives us the opportunity to move into revenue fairly quickly. We may well find that, sticking with your word, flagship, we may well find that the real opportunity for this company to excel is Lolworth. Again, just given the scale of that site and now I suppose the multi-mineral finds that we have. I think what investors should expect is we're not deviating from the course. We're sticking with getting those two alluvial projects into production. But with Lolworth today, it was always on the radar, but it's now very, very much on the near-term radar in terms of what we can do to boost our findings. There will be a further drilling campaign there in due course.
Okay.
I mean, why would there not be? We'll continue to examine the findings from this campaign. But the silver was maybe not a total surprise, but a very, very welcome addition to what we already have on site.
Absolutely. So I mean, I'm probably getting ahead of myself here, but I always like to do that, particularly when I've come back from a very bullish investment conference where everyone was talking about precious metals. Now's the time to strike. What do you think you've got to do at Lolworth then? Do you have to sort of demonstrate scale here? Do you have to go after a resource? What can you do to really demonstrate what you've got, or even prove if you've got to find a bit more of what you've got there?
Well, again, I think your words. I mean, ultimately, we'd look to prove a resource. It's all about scale. This is a very, very large project. Not quite as accessible as Blue Mountain, for example. This is about sort of 3 or 4 hours outside of Townsville. Also quite hard to operate in the in our winter months, in their rainy season. So we're sort of the time of year we're at the moment. But what we will be looking to do over the next, I suppose the next season, is, I suspect, probably to bring a drilling crew back. We may look at diamond holes at this point to get a little bit more precision on what we're finding. But the work done to date was RC drilling. And again, what you can see in the announcement is we're getting multiple silver hits, and some quite significant grades as well. And so we've talked a lot about silver. I mean, the gold has been good as well. I mean, I think when you look at that announcement, it's easy to get sort of distracted by the silver findings. The primary purpose of Lolworth was to examine whether we could prove what we found at the surface, at slightly deeper areas. And we've actually got that as well from the gold. I suppose the last thing to say, it's worth noting we're still quite shallow. This is still mostly at sort of 30 to 40 meters depth. So there's an opportunity to go deeper and actually try and prove how these veins and how this resource could develop at deeper levels. So there's a lot to go for. I keep saying it's a vast area. This is a big project that will unfold over the next couple of years.
Okay, good. So basically, you've proven what was there at surface. You don't quite know exactly how the geology is or where the deposit forms, etc. But there's clearly mineralization and decent looking mineralization. So now it's about further investigation, basically.
Exactly. I mean, we've had a couple of years of surface exploration, which have gone very well. That gave us the confidence to drill, and the drilling results have come back, say, at the top end of expectations.
Good.
We're too early to talk about economics and what the mining might look like, but there's definitely more than enough to support in today's results to go back at a later date and, as I say, go deeper, use a diamond drill as well, and just start to prove up the scale of what may be there, because certainly what we're seeing, it's a whole lot bigger than the drilling that we've carried out to date.
Okay, excellent, good. So then the near-term cash flow, so Blue Mountain, you've got, I think, results due the middle of this month, and also the Raglan acquisition as well. So these are the two sort of near-term cash flows. So what can we expect there? When do you hope to be getting that going?
Well, Blue Mountain results, you could come back any day. I mean, we're always beholden to the lab as to when the results are actually delivered. As you know, we did an extensive drilling campaign at Blue Mountain, again, far, far shallower than Lolworth. But this was designed to map out the areas for future trenching and future production. But most importantly, to give us the commerciality to put in that mining lease application. So those results will be imminent. They're due us essentially now, but as I say, we're beholden to the lab as to when they come back. In terms of Raglan, that is a nearer term. I mean, Blue Mountain's near term, then Raglan is even nearer. We have concluded the material discussions on the acquisition documentation. From an ECR position, we're done. We're ready to go. The vendors have some other assets within the company that owns the Raglan mining lease, which they were going to take out. This has always been part of the plan. They're just making sure they do it on a tax-efficient basis from their point of view. This doesn't really affect ECR, and obviously we want to make sure they do it that's in a sensible way that suits them. And I hope in the next couple of weeks they'll settle on a process, and then we'll move forward to complete that. And then the next stage after that is to get a crew on site and actually move that into production. And so Raglan has a mining lease, so we'll be good to go as soon as that acquisition is completed.
And just remind us on Raglan what it is, how you can get into early production so quickly, really nearer term than Blue Mountain.
So Raglan has all the equipment on site. As part of the acquisition is just over $1 million. There is probably over $1 million worth of equipment on site, including the wash plant, including various other pieces of mining equipment. There is a mining lease that has been awarded to the company. There's a company called Raglan Resources, which is what we're buying. So when we buy Raglan Resources, we become the owner of that mining lease. And the good news is, because Raglan is a relatively small property, that mining lease does not need to go back to the Queensland authorities to be re-reviewed as part of our change of control. So literally buying Raglan Resources gives us the mining lease. We have the equipment on site. All we're missing are people. We've already identified a production team. So once an acquisition is done, we should be able to move that into production very, very quickly. Okay. And then we're into revenue and we're into gold.
Yeah, so it's a turnkey basically. What? Just explain how it works on the ground. What is it? Is it picking and shoveling, or what's the operation look like?
It's an alluvial resource. It's very similar to Blue Mountain. So it'll be trenching along old riverbeds and then gravity separation to spin out the gold. It's a smaller area, but it's more accessible. It's actually just about 5 kilometres off the highway. I mean, quite literally, the team could be commuting from either Rockhampton or Gladstone, which are two of the bigger towns on the coast. Blue Mountain is a little bit further away. As you say, it's a turnkey project. The equipment's on site, the lease is in place. We've already mapped it out. I mean, the vendors have mapped it out to an extent as well. We know where we're going to go. We know what we need to do. Once we have that acquisition concluded, and we've done the difficult bit now, we have a contract that's essentially agreed. And we're just waiting for the vendors to work out their own housekeeping, if you like, and then we're good to move forward.
And do you know what sort of revenues you could get from that at this stage, or not quite?
I think it's something we'll probably put together in due course. Okay. But I guess to help investors, the wash plant is rated at 60 tonnes per hour. So if you're looking at 8 to 10 hour days, we could be doing up to 600 tonnes of processing per day. And alluvial is very much about volume. And then you can take some assumptions and also leave investors to make their own assumptions as to whether they want to say it's 0.15, which we think is the commercial cutoff, or 0.3, or any other number they wish to pick. Have a look at the gold price on screen, which of course remains very, very strong. You don't have to do that many calculations to see that Raglan becomes very profitable very quickly, and it's low cost to operate. We estimate that up to 3,000 Australian dollars is the total cost of per day of operating that site. So that's all the staff, all the equipment, the diesel. Anything above that in terms of gold recovery, and we're into profit.
Okay, excellent, good. Thank you for that. That's some maths that people can do. Tax losses, can they fit into this or not?
They totally do. Yes. Yeah. Right, so the way we have structured the group is everything in the ECR group sits in a straight line. We have two Australian subsidiaries. The tax losses sit in ECR Minerals Australia, which owns ECR Minerals Queensland, which is the subsidiary that is buying Raglan Resources. So anything that is done at Raglan, sits within that Australian tax group, and this is something we worked out during the course of this year. As you'll recall, we did look at selling the tax losses at one point, and that door is not closed. But if we have 2 alluvial projects in production, again, it's a fairly simple calculation. We have in excess of 75 million Australian dollars of tax losses. We could be operating tax free for quite some years, and there's another huge benefit of what we're doing.
Good, excellent. I'll just finally, Creswick. Any updates on this with the joint venture discussions?
Yes, so there was a very productive meeting last week, actually, between our team and the Bold Gold team. It's gone extremely well. The next stage is to turn the heads of terms, which we announced a couple of months ago, into a JV agreement. But nothing has changed in terms of the aspiration, and it will be a JV agreement where Bold Gold will earn an increasing stake in Creswick by covering the exploration cost. So ECR will be carried from a cost position in an area that sits in the Ballarat gold zone. You're one of the most famous sort of gold rush parts of Australia. So again, Creswick is a very extensive area. Not quite Lolworth style, but it's got a number of different features. And if Bold Gold can harness some of that, some of that work we've done in the past, I think this is quite an interesting opportunity for ECR to be a passive earner from Creswick, whilst, as I say, we focus our efforts in Blue Mountain, Raglan, and Lolworth.
Excellent. Well, Nick Tulloch, CEO of ECR Minerals, thank you very much for your time today.
Many thanks, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programmes at stockboxmedia.com. Thank you for watching.